Taxes are the lifeblood of any nation. They are the financial fuel that powers the government and enables it to provide essential services to its citizens. Imagine a country without taxes. There would be no roads, schools, hospitals, or even a defense system to protect its borders. From healthcare and education to infrastructure and national security, taxes fund the very fabric of a functioning society. Through progressive taxation, where higher earners contribute a larger proportion of their income, governments can redistribute wealth and provide essential services to those less fortunate. In essence, taxes are an investment in our collective well-being, fostering a stronger and more prosperous nation for all. In India, the tax system is broadly categorized into two main types: direct taxes and indirect taxes. Direct taxes are levied directly on the income or wealth of an individual or organization. This means you pay the tax directly from your pocket to the government. On the other hand, indirect taxes are levied on the consumption of goods and services. These taxes are collected by businesses on behalf of the government and are often hidden in the price of the products we buy. In India, the power to collect taxes is divided among different levels of government: the central government, state governments, and local bodies. The central government collects taxes like income tax and customs duty for national-level initiatives like defense and infrastructure. State governments levy taxes like sales tax and excise duty to fund state-specific programs such as education and healthcare. Local bodies like municipalities and panchayats collect property tax to manage civic amenities and infrastructure. This decentralized approach ensures that tax revenue is utilized efficiently and effectively at all levels of governance. Each level of government plays a crucial role in addressing the diverse needs of our vast nation. Direct taxes are taxes that you pay directly to the government from your income or wealth. These taxes are a crucial source of revenue for the government and play a significant role in financing public services. One of the most common examples of direct tax is the income tax. Individuals and businesses earning above a certain threshold are required to file their income tax returns and pay taxes on their income. The income tax system in India is progressive, meaning that individuals with higher incomes pay a larger percentage of their income as tax. Another important direct tax is the property tax, which is levied on the ownership of immovable property like land and buildings. Property tax is a significant source of revenue for local bodies and is used to fund local development projects. Unlike direct taxes, which are directly paid by individuals and organizations, indirect taxes are levied on the consumption of goods and services. These taxes are collected by businesses at the point of sale and are then passed on to the government. One of the most significant reforms in India's indirect tax system was the introduction of the Goods and Services Tax, or GST, in 2017. GST replaced a complex web of multiple indirect taxes levied by the central and state governments, streamlining the tax structure and creating a unified national market. Prior to GST, India had a multi-layered indirect tax structure, including VAT, excise duty, and service tax, which often led to confusion and cascading effects. GST simplified this system by subsuming most of these taxes into a single destination-based tax. The fringe benefit tax, or FBT, is a classic example of how tax policies evolve over time to address changing economic landscapes and address loopholes. Introduced in 2005, FBT was a significant departure from the traditional way of taxing perquisites or benefits provided by employers to their employees. Before FBT, many of these perks, such as company cars, club memberships, and subsidized housing, were either not taxed or taxed at very low rates. FBT aimed to bring these benefits under the tax net by shifting the onus of paying tax from the employee to the employer. This meant that companies now had to calculate the value of all fringe benefits provided to employees and pay tax on them as a percentage of their total payroll. As we have seen, taxes are not just about collecting revenue. They are about building a better future for all citizens. They are the foundation upon which governments can provide essential services, invest in infrastructure, and create a more equitable society. From education and healthcare to national defense and scientific research, taxes fund the very essence of what makes India a thriving democracy. By fulfilling our tax obligations honestly and diligently, we contribute to the development of our nation and ensure a brighter future for generations to come. As responsible citizens, it is our duty to understand the importance of taxes, engage in informed discussions about tax policies, and hold our elected representatives accountable. Remember, a stronger India starts with a responsible and participatory approach towards our tax system.